The plenary meeting is the key discussion forum for the covered bond industry, where we discuss about the current market state of play, regulatory pressure, market dynamics, and the directions to be taken next.
I think banking union has been a very good case in point about how we can improve things in Europe in the banking sector in a very short period of time. And the third extremely important reform that we implemented was the reform of the financial sector. We have been one of the countries in Europe that has implemented a much deeper reform in the financial sector. But very importantly, what we did as well in 2012 was a very in-depth reform of the governance of the banking system, especially of the saving banks, to increase the professionalization in the management of this part of the financial sector. So the result has been extremely good. I mean, I think Spain is a good case in point to analyze how positive a reform in the banking sector could be in the real economy.
This year, the Spanish authorities launched a public hearing on the potential improvement of the legal framework. On the other hand, this year, in April, it was enacted a new law that includes a new legal framework for securitization in Spain. So, Alberto, it would be really interesting to know the future. How is the current state play of the improvement of the legal framework?
After the elections, we will begin preparing this new legislation with the results of the public hearing, if the government so considers. From my department, what I can say is that in my intention to encourage this reform, because I think that the results are very valuable, so we should take profit of it. So just to briefly sum up, the main issues we talked about we discussed in the public hearing was how to reduce the asset encumbrance, the possibility of segregation of the assets after bankruptcy, if there should be a revaluation of assets and what is the timing for this revaluation, the possible modification of the eligible assets, the possibility of implementing liquidity rules, transparency and the transparency rules and the asset pool monitor.
The ECB has purchased already 112 billion worth of covered bonds, and taking in together all the three purchase programs, they're holding 145 billion worth of covered bonds, which is a little bit over 20% of the eligible CBPP3 benchmark covered bonds outstanding, which is sizable.
I think the key question is when they stop, what will be the market reaction? And if the ECB at one stage will stop buying, I think our concern is that those countries who massively benefited from the purchases will also suffer the most.
You got to also think what's on top of those covered bonds now compared to a few years ago. The one thing that we shouldn't forget in forums like this is, if you look at bank balance sheets in and around Europe in particular, you've seen a sea change in terms of what sits on top of that covered bond funding level. This is going to change the nature of covered bonds, we believe, dramatically.
Yesterday, the steering committee and the label committee endorsed the announced harmonized transparency template, which is a pillar of the entire covered bond label story. Well, we identified three major dimensions of transparency, which are the three pillars of the covered bond label. First thing, it is very important that investors will have very detailed information on the ISINs which are labeled. I recall that the label is given to the covered pool, so whatever is coming out from a covered pool can use a covered bond label. We move to the second dimension of transparency. I think that Mr. Investors would like to know what will happen in case of default of my issuers. So what we have done for years, we ask all the best legal experts, country per country, to build summaries of every single legislation which are available on the website. And then the real challenge was on the asset side. Analysts supported us in helping us to understand what were the key questions for investors and what was implementable. And little by little, we moved to a common guidelines, then to national transparency template, and now I think that we succeed to reach the real target. Every single investor can compare data on the asset side from Singapore to Scotland. That's the real added value of this national transparency template.
The industry was asked to look for a compromise. Is the HTT the right compromise?
So at the ECB, we use the data and the template as one of the several sources of information on covered bonds. I think it's progress that is made, and it's of course good that transparency increases and also that there is more harmonization. Thinking about it, what is needed and what makes sense, the covered bond label is definitely an important input.
Moving to you, Massimiliano, you the HTT in line, or?
I have to say this is a substantial and major improvement. So if I look at your template today, not only I'm happy of the fact that it's called now harmonized transparency template, it is an harmonized one, and it has broadly solved those discrepancies that we had identified. It fulfills, broadly speaking, the need for a comprehensive risk analysis by the investor, and it is harmonized. So I think it raised the bar in that respect. So it is obvious. It is no doubt a major improvement in this respect.
With an overview of what's going on an international level.
Banks want to focus on SMEs as a way to increase their profitability levels, but we are approaching a scenario where the only pure funding instrument we could have in the future could be the covered bonds. We need new funding instruments, and on regard of that, and due to how SMEs are in Southern Europe, new instruments with clear definition, clearly separated of the mortgage law covered bonds could make sense for the society first, for issuers and for investors.
We think it's very important to have a rating agency on board looking at the introduction of this new product.
What we can expect is that there will be a demand for new products, in particular with respect to SMEs. Probably there will be more interest in analysis of medium-sized entities, and this will be required, especially if the initiative is aiming at unblocking the flows of fundings across jurisdictions.
We start from a pretty low starting base in terms of housing finance markets in emerging economies, but it's a low base, but rapidly evolving and growing relatively fast. So covered bonds in emerging economies. So there's the bad news or there's the good news. The bad news is it's still nearly not there in the big picture. But the good news, we'll come to that, is there are a lot of countries preparing themselves actively. We expect, although the covered bond markets have not really picked up in sizable way yet in emerging countries, we expect in the next 2 years to have 5 or 6 countries which have repeated different issuance. We expect most of the BRIC countries to have disposed of both securitization, covered bonds, and all arsenal of different funding tools in the next 3-4 years, yes.
What did finally trigger DBS' successful market entry this year?
We have always wanted to come to market, but the difficulties of aligning the various parties as a AAA jurisdiction with the banks in Singapore being AA, there was no reason other than to make and to ensure that the product would be a AAA product. Right? So that's why it accounted for the 3.5 years of work time it took to get the product to market.
Maybe, Jakub, in a nutshell, how far away is Poland from actually entering the market?
Actually, from my perspective, we as a mortgage bank, PKO Mortgage Bank, we are operating starting 1st April this year. So in terms of our actually ambitions, we would like to have first domestic issuance first quarter next year, and then have foreign issuance second, third quarter next year.
Almost ready. We have established our program. In Turkey, unfortunately, we do not have the institutional investor capacity. So we have to do the investor work internationally, and we will need to target the European investors, and that will require us to have a swap arrangement in place.
If we could be anywhere, where would it be? Take what we need and disappear.